All right. Welcome, everyone. Welcome. So, thank you, everyone, for joining me to the start of the weekend. I did a quick time change. We usually do the 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time for our lives here, but I just want to do a little earlier one since people are most likely going to be going out tonight and we won't be having a lot of people, so do nothing. Weekend, baby. Yes, sir. Weekend it is. Joe, market's closed Monday. A bit sad. Yeah, the market is closed on Monday. I completely forgot about that. But yes, the market is closed on Monday. So it seems like okay. So our first question here. Okay, so our first question here is, let's see. Someone wants me to do technical analysis on a couple of names. So let's go ahead and do the first one here, SPY, okay, SPY. So obviously the markets had OPX, right? OPEX, and with OPEX, we basically just saw a little bit of volatility in the intraday. I expect a little bit more, but we didn't really see much. So if you go on the 15-minute time frame, all right, we have some sort of an intraday base forming here. Earlier, I saw a inverse head and shoulders. That's still true, but it seems like we're seeing more of a kind of a muted base here, right? We're just going sideways for now. We've been going sideways since yesterday, so I'm not expecting much on Tuesday. However, on the weekly time frame for SPY, this looks very ugly, right? I can't lie about that. All right, we've been going down and straight down. It seems like next week we can see another movement lower. I mean, just take a look at the big volume that we saw for this week. And I mean, the volume that came in this week was due to FOMC meetings, right? And the conference that we had on Wednesday. So that's where we got the majority of our volume. But I do want to see on the weekly time frame a retest of this 200 SMA, which we are currently heading towards, right? And if you guys take a look, right, whenever we retest the 200 SMA, we tend to either go right below and snap right back up, or like we did in late 2018 and early 2019, we go very near it and then we snap right back up. Okay, so this has been kind of a trend here on the weekly time frame. I mean, if you take a look back here as well, right, where we formed a double bottom, and then we were very close to 200 SMA on the weekly time frame. Okay, and back here in 2011, where we actually retested the 200 SMA and it snapped right back up, right? So there's multiple times and multiple areas where we saw the 200 SMA on the weekly time frame being used as a very large level of support, where we can actually start seeing some type of a V-shaped recovery, or at the very least, some type of a bounce, so we can start reversing back up higher and go back on our rescheduled bullish run, right? So I think for SPY here, I think there is a lot more room to the downside. Like I told you guys, I am long-term bearish. Okay, and next week I expect us to bounce a little bit more, kind of reverse to the upside a little bit. We are in oversold territory here on the RSI, right? We are at 31.97. No, not 31.97, 31.01. I was about to say that sounded a little wrong. We're at 31.01. Which is basically in an oversold region of the market here. So I want to see a little type of a bounce on Tuesday when the market opens, so that we can at least, okay, let's go back to the 15-minute time frame here. We can at least fill in this gap right here. Okay, this gap. I want to see this gap filled at the very least, because we have 3 gaps that need to be filled. That we have made in the last 2 weeks, including this week. So, you know, that's kind of unhealthy for a downtrend, right? Obviously, it's bearish, but you know, that gives us more room for a chance to see a possible big bounce because of a gap down. Okay. All right. So next one is MU. All right. So MU is a semiconductor name. It's one of the kind of the growth names, semiconductor names that tend to have a lot of strength, but obviously semiconductors lost strength, especially MU here, and it's been going down straight, right? And today we start to find some support at a previous level of resistance around 54, right? If you take a look back in 2020, okay, in the late summer and late or mid fall seasons here, this 54 level is acting as a very nice support level. You know, we can see this as a double bottom bounce here from yesterday and today. So for MU, I will want to see a revisit back to 58. Okay, revisit back to 58, which will also allow us to start filling the gap here, and it will complete the gap fill that we made here, and possibly hit 59.50 to around 60. For another retest, right? And once we have that retest, I want to see the 10 SMA coming back down and retesting with the price, so that we reject off of somewhere around 60 and at the 10 SMA, and we start heading back lower again, right? So we do have earnings here on June 30th, so who knows? We might continue to see a reversal as we run up into earnings. And then WMT, yeah, so Walmart looks very, very bearish. All right, this is like an easy win to the downside. So easy swing to the downside. Why? Well, first of all, you're looking at a classic H pattern. All right, let me take my brush out. All right, this is a huge classic H. Okay, so an H pattern is usually looked upon as a bearish chart pattern, where we have a really big move down, a straight move down, and then we have a nice oversold bounce, right? So we have to kind of cool off the steams from all the bears that were in the initial downpour on the sell-off, and then the sellers start coming in again, where we start coming in, right? And we start to see more sellers coming back, especially the sellers that were present in the initial sell-off, and that's where we start forming that H pattern or H looking pattern, and with this support around 118 that we've been holding for the past 4 trading days, including today, right? And if you take a look at why 118 is a support level, well, take a look at the initial movement to the downside, right? We had a bounce around this $118 level, where we saw that immediate reversal and oversold bounce happening. So if we break below 118, okay, next week, if we do, okay, so this is a huge level of support that we need to be holding, right? This $118 level. We come back down to 116.50, and how do I know that level? Okay, how do I know this level here? All right. We're looking at a previous level of resistance and support, right? We have resistance multiple times here, resistance multiple times here, and support multiple times over here, right? So, this could be a perfect area to take profits, but If this 116.50 area does not hold, we have an even stronger area of support that we can head back down to, which would be around $114.50. So Walmart here looks like a pretty clear short to the downside. I mean, you want to be following the trend, but at the same time, you want to know what your risks are, because Walmart has been beaten down a lot, and there's a possibility that sellers can be quite exhausted, and we can see sellers just completely getting out of this name and buyers slowly starting to come back in, filling in the gap that they've left, right? So that's exactly what seller exhaustion is. So if you break below 118.10, like I said, that will be your entry. But yeah, so Walmart and all these other retail names, they're starting to become oversold again, right? If you take a look at the RSI, after all that retail numbers came out and retail guidance saying that these companies like Target, Walmart, they're all having issues with supply, right? They have too much supply because they've over ordered every single product that they have on hand, and they need to start selling it, but there's no demand, right? People are not buying because, well, things are getting expensive, right? So if you don't have demand, then what are they going to do with all that supply, right? They're just losing money, especially if the product spoils. Okay, so a lot of these companies like Target and Walmart are starting to do a lot of sales. If you guys haven't noticed, I go to Target a lot and Costco, but Target mainly, and Target tends to have a lot of sales these days, which is pretty nice since I take opportunity of that. If you guys aren't, you guys should be doing that as well. Okay, so that's it for the first question there. And Joel, if you're still here, let me go over your question. So this is the next question here, and Joel, thank you for the question. So let me read exactly what the question is. So your question is about psychology. So you said, I feel like I get very emotional when trading when it comes to finding good setups and waiting. I feel like I need to trade. Maybe with time I'll calm down, but if you can maybe talk about being patient and maybe tricks you can use to achieve this. Dude, you're a freaking sniper when finding good setups. Thank you. Thank you for saying that. For the people who are just joining, Joe just told me that I'm a freaking good sniper when finding great setups. Thank you for that, Joe. So yeah, so first off, psychologically, right? The number one reason why people want to trade as often as possible is that they feel like they're not going anywhere, right? But that's the thing. During the first, I would say maybe 1 to 2 years should be all about learning, right? And usually learning does come with losses. All right, I'm not saying that won't happen, right? Because in the stock market, the only way that you truly learn is if you lose your own hard-earned money through good risk trades that you've done, right? And if you lose on that good risk trade, you start wondering, what happened here? And you start digging, right? And once you start digging, you start to find answers to that specific potential problem that you've had, right? And you start learning from that point forward. So, I see a lot of traders that are impatient in the first 1 to 2 years. I was that person, right? And the only way that I figured out a way to kind of, I would say, push back that mental block that I had in my head of wanting to trade every single day was that I just need to calm down, right? I need to calm down, take a look at the chart, take a look at the price action, and specifically take a look at only a couple of tickers. Now, if you guys remember what I said on last night's live stream about trading one single ticker like SPY, okay? For me, what kind of helped me was that I was taking a look at a couple of tickers, 2 to 3 tickers every single week, right? Of the same things, right? Same tickers. And they were SPY, Apple, okay, and Amazon. Okay, so obviously by now, you guys can also assume that all 3 names I'm very, very comfortable with how the price reacts and trades, especially the price action, right? And how they react to certain price levels and, and whatever technical analysis I've done on the name. So, after a couple of months of doing that, or even weeks, right, I started to get really used to how SPY and Apple and Amazon move, and how they actually move parallelly sometimes with each other, right? But once I got used to that, right, I decided to start looking at more high quality setups across a broader range of names, because I felt confident enough to let myself know that I am able to trade 3 tickers really well, right? So you kind of start building kind of like a ladder up, right? Where you start at the bottom, right? Where you start with 3 or 2 different tickers, and you get really focused on how they trade every single day of the trading week, right? And once you've mastered how they trade, how they react off of significant price levels, what the price action looks like, right? You can move up to where you start looking for really good, high quality A+ setups. And why do I always tout that you guys need to be looking at really good, high quality setups? And Joey just said it, right? I'm really good at finding high quality setups because I've trained myself to be able to look and observe for high quality setups on any time frame, right? So the next thing that I basically did was that on the daily time frame, I looked for specific chart patterns, whatever it may be: bear flag, bull flag, ascending triangle, wedge, head and shoulders, whatever it is. I was looking for a chart pattern, right? Cup and handle, inverse head and shoulders, whatever it is, right? And once I found those chart patterns on the daily time frame, okay, I trained my eyes to be able to see, those patterns without having to draw them out, right? And that takes hours and hours of your time. And that's the thing about the stock market, right? You only need to put in hours and hours of your work, right? You don't have to put actual physical work, right? You don't have to be moving things around. The only thing that you're doing is observing with your naked eye and focusing on the charts that you're looking at in front of your screen, right? And it might sound tedious, but it's hell of a lot of a better job than any other jobs out there, right? It's something that people tend to overlook, but with all that work comes the rewards, right? Of being able to really stay calm with your trading and really focus on setups that you want to see. And after you've trained your eyes to observe these chart patterns on the daily time frame, you start to see chart patterns before they even begin to form, right? And Joel, I know you've seen me do this before, where specifically for SPY, right? I say, like, let's say for instance on the 15-minute time frame or the 5-minute time frame, I say, hey, it looks like we're starting to form a descending channel here, or hey, it looks like we're about to start a wedge pattern, right? I did that multiple times this week, and the only way I was able to get to that point was that I'm able to really understand, right, SPY's price action, and I'm able to kind of know instinctively, almost like a gut feeling of when a chart pattern is about to form. And obviously there's a little bit of technicals into this as well, but I want everyone to get to a point where you're able to kind of see the future, like quote unquote see the future, depending on how the price is moving, right? With higher highs, higher lows, or lower lows and lower highs, and etc., right? It's at that point, once you reach that point, right, you start to feel like you don't need to be really rushing into trades, right? You don't need to be rushing into trades that don't look good and aren't worth the risk of your hard-earned money that you've put in and deposited into your trading account. Does that make sense? Right? So, Joe, this is true. Yes, it's very true, right? Because think about it, right? If you're itching to trade, right, what's the most likely thing that you're going to do? You're going to look for whatever name that supposedly looks like the best name to trade for that certain time of the day when the market is open, and you attempt to risk your money and put it onto a trade and execute a trade that most likely doesn't have the best risk to reward ratio, right? Especially, you get really, really hasty with your technical analysis, your ability to observe the price action, right? Because you're itching to trade, right? You want to click some buttons to get some profits, right? Because you don't like to see cash just sitting on your trading account doing nothing, right? So, you just have to have a systematic system where you're kind of building up your knowledge in your head, right? And that's what I've been doing, and that's what I'm still doing 5+ years, right, after being in the market, right? If you guys didn't know, I initially went into the crypto market first, and then I transitioned to the stock market. It's a little fun fact about me. with all that now, right? With that information, I would say the number one thing that you should tell yourself is that you're not late. You're not late, right? Chart patterns will stick out to you and will stand out. Okay, chart patterns will stand out, all right, if you train your eyes for hours and hours on end to be able to observe them, right, without having to actually draw them out, right? And it's kind of an undescribable experience and feeling. You have to be able to put in the work yourself in order to experience what I'm telling you guys right now, right? It's something that kind of comes to you as a gut feeling type of way. I mean, that's kind of the only words that I can use to describe it. There's no other way to describe it other than that. You just have to really train your mind and eyes to be able to pick out the really good high quality setups. But remember, I've done that by looking at the daily time frame first. And why does that matter? So now, why does the daily time frame matter? Because you're looking at kind of a balanced price trend, okay, on the chart, right? Because the daily time frame is kind of the in between the intraday time frames and the larger time frames, right? So the daily time frame gives you enough info to tell you whether or not the trend is to the upside or to the downside, and gives you enough data to be able to form chart, to be able to see and observe and draw out these specific chart patterns. Does that make sense? So once you're able to do that, right, you literally become a sniper, just like Joel told me here, literally. So it's something that you just have to accept, right? Especially if you're a beginner trader or you're in your first year or first 2 years of trading, that it's gonna take time, right? Trading is something that you can't rush, or else you're gonna lose a bunch of your money. All right, I did that, unfortunately, right? So I think in order to really step out of that myopic mindset and perspective of wanting to trade every single damn time when the market is open, right? And you have this is what we call itchy fingers, right? Put your hands underneath your butt and just observe the market, right? You'll start to find some patterns forming on the intraday time frames or even on the daily time frame, right? Day to day. So just tell yourself that it's worth it, right? I mean, I really wanted to quit every single year that it wasn't working out for me, right? When trading wasn't working out. But resilience, okay, discipline, and persistence, and preparedness, right? All those 4 things will help you to gain that patience, right? It'll give you that patience to trade really well. And specifically finding those A+ high quality setups that I've been talking about, right? So, in order to really understand what's going on in the markets, right, you need to be able to calm down, observe, wait, and then execute, right? And all that comes down to the experience that you've had in the past, and all that experience amalgamated into one coherent, right, feeling and thought process. Okay, it's like a good mixture of a feeling and a thought process. So, it's going to be unique, obviously, for everyone who experiences it. But at some point, I think everyone experienced the same thing where you had that one aha moment, right, where it clicks in your head, and you start to realize that, I don't need to be trading every single time of the day, right? I don't need to be looking out for multiple chart patterns on every single name that I go through, right? You don't have to do that, right? Once you find, right, 1 to 3 or 5 good setups for every single week, or for example, in the CFO Swing Watch, I tend to look for high quality setups, right? And I pick at least 3 to 4 of them or even just 2 for the main stock picks in my CFO Swing Watch newsletter, right? And those are the ones that I'm looking at for those high quality setups, right? And once you start doing that, you get a good sense of having a perspective of hey, I have these good setups here, so why don't I just focus on them, right, for this week, right? And I don't need to be going out of my way to really look for every single setup that's out there, right? Because once you start doing that, that feeling of wanting to trade every single time is going to come back, right? So, I think it's really, really important to remind yourself that it's a process and that patience will come, right? Everyone will have impatience in trading. That's the thing, right? A lot of people tell you guys that, hey, just stop having impatience, right? Just stop having it when you first start trading. But that's impossible, right? Because we have money, that our hard-earned money that we want to use and risk in order to get more money, right? In the stock market, right? We want to leverage our cash so that we can have more cash, right? So there is going to be some impatience, but once you start using those strategies and those tactics that I just told you guys about, you'll start to realize that it feels better to be thinking in the long term and for the long haul. Okay, so make sure if you guys, if this is your first, 2 years or first year of trading, remind yourself that it's all about soaking in all the information that's available, right? And all the experience that you can get in the first 1 to 2 years of your trading journey, right? This is the time when you need to be soaking in every single information and experience that you have, okay, and remembering it. Because later down the road in your trading journey, you yourself would thank yourself for thinking in that manner, right? And as you grow older in the trading journey, right, you start to realize that you don't have to be trading every single time of the day. All right. So that is my long-term answer for that question. So I obviously will be trying to give you guys a better answer. That was just off the top of my head, but that's the immediate thing that came to my mind, from my own personal experience of what I've done. But just good luck, right? Just good luck. And remember, it's all about soaking in that information, right? Think of yourself as a sponge, right? Just keep on soaking up information, and doing the hard work that's necessary in order to profit in the stock market. All right. Hey, Joel, you're up $100 up this week. All right. All due to your guidance, man. The Discord is priced is awesome. I'm glad to hear that, man. $100. That's huge, right? I mean, people are working, and they don't even make $100 in one day with the hours of work that they have. So congratulations. You're welcome, man. You're welcome. That's amazing. So, I think, like I said, guys, if you really want to really better yourself with not trying to trade every single day or being emotionally attached to trading, like I said, take your hands off of the keyboard and just observe, right? Soak in as many, information that you can see with your naked eye, right? And like I said, look for the specific things, right? Price action, how the price is interacting with significant levels. And from that point forward, if you're used to that on that specific name, start looking for chart patterns, specific chart patterns, right? A+ high quality chart patterns on the daily time frame. Right, that's how I was able to kind of get away from that feeling of wanting to trade every single damn day and obviously losing tens of thousands of dollars, right? So, at some point it will click. Okay, Joel. So that is my full circle of the answer to your question. Okay. Hey, Dion, what's up? All right. So that is it for the questions. That was it for the questions for the live stream. It seems like a lot of people are here tonight, which is fine. I understand it. It's just the weekend. I mean, I wouldn't have expected a lot of people to come, but I will see you guys all on Monday. I might do a Monday stream right before market open, but most likely I'll be busy doing all the research for for the CFO Swing and Watch newsletter. So I may or may not do a live right before Tuesday for the stock market open. So I'll let you guys all know. But yeah, thank you guys for joining tonight. Make sure you guys hit that notification bell and give us give this video a nice like on the video below, on this video right below. And I'll see you guys all on Tuesday officially. Okay, the Monday live I don't know if I'm going to be live on Monday, but I'll let you guys know. All right, it's to be determined. Okay, TBD. Okay, have a great rest of your night and have a very safe weekend. I'll see you guys all next week. Good night.